A very warm welcome. 2020 has been a year of many firsts. While we have been continuously seeing a surge in COVID 19 cases, the GDP number released on 31st August 2020 came at a negative 23.9%. This has been the worst contraction ever since Indian independence. Consumption constitutes roughly about 59% of Indian GDP. Hence, it is very important to understand what this sector means and what lies ahead for this sector. It is extremely challenging for someone to really understand what could be the potential trends because this it depends on consumer behavior, which is continuously evolving and dynamically changing with ever changing situations that we are in. To discuss this subject, we have with us Mr. Chintan Haria, who is the head of products and strategy at ICICI Prudential Asset Management Company Limited. He has over 20 years of experience and is a chartered accountant, cost and work accountant, and a certified management accountant from USA. Thanks, Chintan, for joining in, and I hope you, your family, and everyone at ICICI are doing well.
Yeah, thank you so much, Megha. Thank you, and hello to all your viewers.
Chintan, let me first begin by asking you something based on a recency bias. While most sectors have been pained, by COVID-19, some of these segments have done exceedingly well. Yes, I'm referring to the sanitizer market. I am referring to the ready-to-eat, ready-to-cook segments. I understand from the last published numbers, sanitizer market industry has gone up from 400 crores to 25,000 crores. The management of ready-to-eat, ready-to-cook companies have been of the opinion that what they could not have done in decades has happened in weeks altogether. We also understand, end of the day, humans are social beings craving for social interaction. So, do you think that the recent euphoria around a lot of these categories is short-lived, or they will continue, to have some momentum in the long term as well?
So the one good part which I take from your question itself is that if all Indians start using a particular commodity, which is a sanitizer, the number went from 400 to 25,000. I don't know whether it's 25,000 or less or more. But if all of us start using a particular commodity, that's the power of the number of Indians that are there. And the good news is that over the next maybe 10 to 20 years, we are going to see more and more of our people coming into, or the population coming into the middle class. So more demand for goods, more demand for commodities, consumables, etc. So yes, from a structural perspective, the consumer theme, much like the West, much like earlier Japan, China, will be the core as far as India's growth is concerned. And to the recency phenomena which you spoke, I think fear makes us do a lot of things as human beings. And I think the first thing that we started doing was probably started using sanitizers a lot more. So I think it is much more a current phenomena. I don't think it will last beyond a point. But yes, we will see more in terms of structural changes which are happening in the way we live because of a particular health, hygiene, and sanitation awareness that has happened across the board, right? It's from the lowest strata of the society to probably the highest strata of the society. And I think that augurs well from a consumer company perspective. We may see moderation in some of the things today. What's happened is, of course, because of the lockdown, since many of us were at home, I think there was a high usage of some of the consumables. Things will normalize, but I think what are staples will remain staples. And as I would link it with income growth. So while on one hand, of course, the use of sanitizers has gone up, the incomes have got affected in the lower strata, and that's where some of the consumables may have seen a hit also. But as a structural trend, definitely in the long run, you will find people moving towards a more healthy, ready-to-eat, packed food environment rather than eating probably immediately going out and eating on the street. At least I haven't done that for the last 5-6 months. Maybe I'm craving to do that, but I'll wait for COVID to settle.
Right, Chintan, I think, all of us are hoping to probably, have a nice evening very, very soon. And I hope it really happens soon. Chintan, that brings me to my next question, which is that, e-commerce has been a leveler of sorts. So, Indians are getting more aspirational thanks to technology, social media, etc. And what we have also seen is, some of the bigger brands which had their presence only in tier one and tier two companies earlier, now, they can easily reach out to tier three, tier four cities as well. Am I right in assuming that, this is going to be a big fillip for the bigger organized players, and it will kind of lead to a tendency where the big are only getting bigger and kind of wipe away all of the unorganized sector.
So two parts to your question. One is big getting bigger, the inroads of e-commerce, and second is of course what happens to the smaller players. The first question is very clear. E-commerce is here to stay, and if we see the parallel which has happened in US, right, the adoption of e-commerce there, at least based on the reports that I read, is it has taken a leap of 10 to 20 years in a span of 3 to 4 months. What didn't happen in the last 10 to 20 years has happened in the span of 3 to 4 months. And in India, of course, also, if I look at my own self, the use of e-commerce has gone up exponentially because practically everything is coming through e-commerce as far as current environment is concerned, whether I buy anything for my kids or any games, etc. Earlier, it used to be going out and buying from a shop. To that extent, I think the penetration has increased, but we must remember that ultimately e-commerce is just a platform and there are brick and mortar businesses behind that. So to your second part of the question as to what happens to the unorganized trade, I think eventually that unorganized trade, there are two parts. One first part is that unorganized trade will be brought into the fold of e-commerce itself, but they will get connected or hooked onto e-commerce themselves. So more and more businesses, more and more, even if I say small shops, they would have their presence on the e-commerce platform as well. So they will have a target audience, which is essentially for the brick and mortar part, which is their physical business, will be somewhere nearby 2-3 kilometer periphery where people will come, they know, they touch, they feel. But otherwise, they are also on e-commerce platforms. Like many of the things I've ordered in the last 3 to 4 months, I've seen that some has come from a shop in Kolkata, something has come from a shop in Jalandhar. So it's like, it depends on how entrepreneurial an individual or a organization is going to be. And I think India's entrepreneurial spirit is well known. So eventually, most of the people will get hooked onto the e-commerce bandwagon because e-commerce is essentially not a seller of anything. E-commerce is just mostly a platform which brings in all the sellers together. So in a sense, what you mentioned, right? If earlier my target audience for my good or service which I'm offering was only the peripheral 2-3 kilometers because that's what the reach was, or maybe 5 kilometers or a particular city. Now the entire nation, tier 2, tier 3, and if I dare say even probably internationally, has opened up because of e-commerce. And so if you find more and more people getting onto e-commerce and selling their goods and services on e-commerce, it's actually a fantastic thing from a growth perspective. Just the way the business is done is different. Having said all of this, even in US today, which is which probably has seen e-commerce penetration for the last 20-30 years, the brick and mortar is still 75 to 80% of the trade, while the non-brick and mortar, this is in normal times, of course, COVID times may be a bit different and we don't have immediate data, but e-commerce does not overrule brick and mortar at all. So brick and mortar also remains. So they will coexist. I think the fears which people have will probably not come true in terms of the depth of brick and mortar completely. Yes, the way the business is done will change slightly. People will get hooked on. I think more and more, if you see on the ground as well, the local kirana shop will get connected to the e-commerce platform of their choice, whichever is the largest. And yes, there is a element of duopoly or duopoly. In other words, there'll be 2 or 3 large e-commerce players who will basically be there, and the rest will probably be peripheral. So there is an element of duopoly there, but I think brick and mortar, I wouldn't worry too much.
Right. I think, you've brought it up, put it up in a very nice way, saying that, they are here to coexist. And brick and mortar is ultimately the backbone for any e commerce platform to thrive. Brings me to my next question, Chintan, which is that if you look at the online share with most retailers have in India as on date, it is less than 5%. Maybe during COVID times, it could have increased by a few percentage points here and there. But the problem, which you partly alluded to in your previous answer, is that logistics play a major role. So that is the reason probably if we need to order something, Flipkart and Amazon are, the first choices, so to say, because it is about having a good consumer experience. So do you think that there is huge scope of, backward linkages with logistic companies that most retailers need to do going forward?
So effectively, the trend which I've seen and or we've observed over the last maybe 3 or 4 months is that more and more brands, more and more large corporate houses also who have very strong brands, they are launching their own apps, they are launching their own websites, they are upgrading their apps, or they are consolidating various offerings from various companies which they had and bringing it under the umbrella of one single app. That essentially is to make the logistics backbone that much easy, right? Because if you have 10 orders of 10 different things on one app, it becomes that much easy logistically to supply it to a particular pin code, etc. So yes, that is definitely happening, and I would say that not all e-commerce platforms or not all companies will have their logistic backbone, because you need a critical mass. You don't necessarily need a full-fledged logistics, hub. You'll have godowns, you'll have your own cars or your own trucks, etc. to transport. It's not possible for everyone to do so, and hence, as I mentioned earlier, it will probably be on the e-commerce platform, 2 or 3 large players which will control about 90% of e-commerce. And that's where if you see a lot of action is happening right now in terms of big buyouts happening, big investments happening. But the smaller players, of course, they will have their own niches. They may have their own, so they will be available on these 2, 3 e-commerce platforms as well. They will have their own apps as well. And if something is ordered on their app, they'll take backbone use of any of the logistics players that are there already established, and they'll probably build it in their cost as far as they are what they charge to the customer is concerned. So I don't see everyone building their logistics platform, because that itself will become logistically difficult. But yes, the large 2 players will probably invest a lot in logistics, while the smaller players who are building their own apps or their own e-commerce platforms, they will end up using the logistics players which are already available. So in a sense, all the ecosystem, the entire ecosystem will benefit out of whatever is happening. Let me again remind the viewers that nothing is changing as far as from a viewer is concerned, or from an investor is concerned, or a buyer of a consumer good is concerned, because instead of going physically, you're probably doing it online. You may actually go physically and then go buying online. Essentially, the producer of the good is same, just the medium through which it is coming to you is different. And that's how the situation is evolving right now on ground.
Chintan, my last question before I hand over to Harsh is that most FMCG companies, generate mindshare through large advertisement spends, right? And now what is happening is with larger reliance on OTT platforms, people stepping out much lesser compared to before. Uh, and also for companies, because they want to probably cut costs, advertisements are coming at a lower fraction compared to what they were earlier. So what innovative ways or methods can these companies deploy to get a larger mind share for the new launches going forward?
Yeah, so if you look at it, advertisements is one of the most important investments for any FMCG company, because they have to build brands, they have to keep investing. Last 5 months in the lockdown, I think in the uh, traditional TV and print medium, the expenditures were lesser, and that probably also is reflected if we see the quarterly performances of the TV or print media in terms of their results being poor. However, in terms of the OTT platform or over-the-top platform, the various social platforms that we all consume, as an Indian as any consumer, we don't pay for the social platforms which we use, but it's essentially these. They are a very strong repository of consumer preferences. So if you and I are viewing a particular kind of shopping experience, we are searching for a particular kind of goods or services, that data is a very, very valuable source for the retailer or for the FMCG company. And they pay those social platforms for that kind of data, because then there is targeted advertisements that can happen. So you'll have banner ads, marketplace advertisements, paid sponsorship, etc., which will happen on the OTT platform. You will suddenly find that when you search for something, say for example a particular brand of television, you'll find suddenly 3, 4, 5 ads which come to you from the various platforms or various providers. That essentially is because those retailers, those brands have paid the over the top service providers or the social media, whichever social media you are in. That's how they make their money. And the fact is that not just India, but across the globe, that's the revenue model for all the social media companies, and FMCG companies are paying a lot on that. It was not only in COVID, even pre-COVID, if any, you can actually search it on a website. The amount of money that was being spent on digital advertising had exponentially increased in India already, because as we became more digitized, as every Indian started to have a mobile phone with a nice connection and availability of data, the target audience expanded from 20 crore Indians to 80 crore Indians. And then the return on advertisement spend for the FMCG company increased exponentially, right? Because their target audience went up also exponentially. So I think that is something which was already happening. And in the post-COVID era, that will only increase.
Chintan, hi. My question
I
is
ask.
more about consumer behavior. So, there are two thoughts which are totally contradictory to each other, and we are not able to understand from those two thoughts how do we read the market. So, on one hand, we have a situation where we feel that as GDP per capita improves over a period of time, the major beneficial is a discretionary spending. While on the other hand, we also know that whenever we are out of a crisis or a shock or even say pandemic, the marginal propensity to consume discretionary maybe reduces a bit. So how do we read this? I mean, is it going to change a consumer behavior in a big way? And the expectation which we had in India, say 3, 4, 5 years down earlier in terms of growth expectation of discretionary spend would change, or we are reading too much into whatever has happened in last 6 months? And do we have any data points in history which can help us understand how consumer behavior change after a shock like this, what we have seen right now?
Yeah, so you're right that higher disposable incomes definitely lead to higher discretionary spends. And that's been seen in India. That's been seen in any country where the per capita GDP has grown significantly. In fact, it has been seen earlier in Japan than in China, that any country where the per capita GDP increases beyond $2,000, there is a J curve. In other words, an exponential increase in terms of demand for consumables. And I think in India also, that is clearly happening or was happening in a very big way over the last 2, 3 years, because we were around that cusp of that $2,000 per capita GDP. To answer your question on has the pandemic impacted incomes and in turn the discretionary spends on some of these items which you mentioned, uh, I think there is a element of saving also which has happened, and there is an element of job losses which has impacted earnings also. But I think the impact of job losses or temporary job losses, if I can use that term, has been more on the lower strata where the migrant workers, etc., plus the lower strata which could not go and go to people's houses and work, etc., which has got impacted. The middle class, so to say, as it is there in India, the work from home, courtesy we being digitized right now. Also, when I'm speaking from home. It has not impacted the way we work because, in some sense, we've been able to move, shift. In fact, if you look at all the IT companies, they have been able to move all their staff. Also, I think all of us practically have been able to keep on continue to work from home. So yes, there has been job losses, but it's more on the lower strata. To that extent, the impact has not been seen. And also what has happened specifically in the last 3, 4 months is that when migrant workers went back to their villages, their towns, etc., they had some disposable income which they had saved. They probably used it to upkeep, refurbish their houses, etc., since they had to stay for a longer period of time, and that's reflected in the results which we've seen in the last quarter of some of the cement companies, some of the asbestos sheet companies, some of the paint companies, etc. You spoke of the past parallel. Yes, in 2008, post the global financial crisis, which happened around 2008 October, or started somewhere in 2008, we did see that the demand for paints, which is, I think, one of the classic cases of discretionary spends, the demand for paints slowed down significantly, and also as a multiplier to GDP growth, the paint slowed down. So GDP slowed down and paints slowed down even further. And I think this time around, you will see that happening in travel and tourism. Imagine the number of Indians. I think we used to spend almost $2 to $3 billion worth of money in going abroad for leisure. And in India also, of course, many of us used to go within India. Some of us used to go outside India. That leisure travel, the travel industry and hotels, airline have got hit the most. And I think it will take some time for that to come back. So So yes, the sectors impacted are different because 2008 was a financial crisis. This is more a health crisis, but possibly in next 6 months to 8 months or maybe 9 months, if what we've seen, and probably your viewers can also check. See, about January, February, sometime in early March, we used to hear a lot about Italy and Spain being the center of activity as far as COVID spread is concerned, and it used to be very, very scary. Today, if you look at it, and there's one website you can go and see, worldmeter.com or World COVID Meter or something like that, the number of cases has come down very sharply. In India today, we are clocking 90,000 a day, and that probably may also come down in the next 6-8 months. And when that happens, probably you will find things normalizing, and we're seeing an uptick happening in some of these consumer sectors also, including your travel, your hotels. So I would believe that it will take 6 months to 12 months at least before things settle in these sectors which have got affected. Much the same way as paints had got affected in 2008. And maybe recently also, if you see, cars had also got affected, right? The car sales had also gone down sharply, and now they are rebounding.
And we really hope that travel and tourism comes into effect much earlier than 6 to 8 months, because it's a massive employment generating sector. So that brings me to my next question, Chintan, which is about valuations. So if we look at the stock market trend for last few years, we have been seeing that market has been paying a premium to FMCG companies. While we're talking, there are companies like Tata Consumer, or we have companies like Britannia or in Asian Paints, which are very close to their lifetime high. So are these values justified if we look at purely fundamental? And my second question is again related to this, and you are a good expert for that because you are coming out of the fund on ESG. If I look at two companies, HUL and ITC, we have seen market giving a very, very different multiple to these two companies. So do you think going forward, Indian entrepreneurs and Indian companies will have to be more ESG sensitive in case they want valuations premium to come to them, and will it become the order of the day?
So thanks for both the questions. And the first question on the PE multiples, I think, see, if I ignore the consumer sector, the first part that viewers should know is that one, there are cycles within each sector. So there are certain PE multiples or certain valuation multiples which are well deserved by each sector, right? They are dependent on their growth and return on equity, etc., or certain parameters like return on capital employed. So those, to put it very simply and in layman terms, the companies which do not need a lot of capital investment but can grow their businesses and can reinvest the money which they make by growing their business further, just purely on the basis of their brand, which is typically all of these names which you've taken, right? You can grow the business of an FMCG company without too much of capital. They have historically also had higher PE multiples because of the growth factor, and also the fact that consumption is the core backbone of any growing economy. Now, on the valuations being justified, well, in an era where globally there is 0% interest rates, many of the consumer names globally have gone to significant high PE multiples. And if you look at the behavior of, and these are good companies in every respect in terms of their brands, in terms of their products, in terms of their penetration, etc., into every market. So like in the case of global, locally also, the FI investments in these companies have grown and their PE multiples have gone up sharply. Now, to hazard a guess whether these are justified or not, I would say that they are cyclically in favor right now in terms of they being very good balance sheet companies and their ESG scores, etc., are also good. But I would say that if the growth does not sustain, or if there is a growth in some other sectors, there is a cyclical growth, which the way 2003 to 2008, if you see 2003 to 2008, the FMCG sector actually underperformed the markets very sharply because it was the era of capital goods, real estate, and utility companies, power companies, etc., which today looks a very far and distant history, that those companies used to have a much higher multiple than FMCG companies. In fact, FMCG companies used to trade at a discount almost the whole of the 2002 to 2010 decade, while of course in the last 6-7 years they've got re-rated. So I would say that it's at a point of time, what is in flavor and what is in some sense comfort of investors, all of us put together, that marks the valuations at that point of time. I would say that investors at all points of time should definitely keep an eye on whether the PE multiples or the valuations are justified by the growth and the future potential growth. And you cannot give unlimited PE to many companies, while at the same time higher PE is justified with growth. On the ESG, yes, we strongly believe that ESG as an investing has picked up a lot in the last 10, 15 years, starting from Europe, then US, and also in Asia, it's picking up. And I think in India also, eventually you'll find that ESG-based investing, which is environment, social, and governance strength, or the strong companies which are stronger on these three parameters, or which are there in terms of sustainable businesses, will definitely take precedence, especially the pension funds, especially the institutional investors. And that's where you will find that those companies which are focusing a lot on ESG will definitely get a higher multiple, or should definitely get a higher multiple. Now, of course, if a company is weak in ESG today, they can act by having they can strengthen their ESG scores by better disclosures, by a stronger commitment to social factors, by better governance, and their ESG scores can improve. So ESG is also not a constant, it can be improved over time. But yes, it is going to become extremely important as we go along in terms of a factor for most of us to invest in, that is ESG. Thank you.
We understand that services is very, very important because it contributes 55% to gross value added. Now, if we look at hotels business, because you mentioned that example, we don't have any business travel, we don't have any leisure travel, and we don't have any events also happening like marriages, functions to a large scale. In the light of all this, though you mentioned that it will take 6 to 9 months as per your estimates for the demand to come back in that sector. But two questions. One, do we have companies in this sector or segment which have, or what percentage of companies have the runway to last that long? And second, do you think their business model also changing over a period of time to allude to this new reality or a new normal?
In fact, I would say in India, we never have had an overcapacity issue uh, because I think for last 10 years or 15 years, we've seen a consolidated growth as far as the hotel sector is concerned. And it's majorly two or three large corporates who are in this particular business. And they've been very, very responsible in the way they've grown over the last 10 years, and with an eye on profitability, of course. And we are nowhere close to the way the number of rooms are in China, etc. Right? I think the scale is 1:10. They have 10 times probably more rooms, 20 times probably more rooms. So India is not in oversupply, but yes, current behavior, like in the last 6 months, of course, I have not traveled, and earlier it used to be 4 to 5 days of travel in a month. So clearly, I don't see that mental shift happening that easily, and hence I think it will take probably 6 to 8 months for leisure travel to come back. Business travel, it will probably become very, very specific. But I think it is very important to note that India is not in an oversupply situation. And I think in terms of business models, the asset light business models, which most of the companies are following, would mean that their balance sheet hit will not be very, very significant. I think over the next maybe 6 months, 8 months, as things evolve, we'll come to know exactly how things pick up. But it's a sector which will take some amount of time to come out. I think hotel sector will not come out immediately out of the pain that it is in right now, and it will have to be given a longer time. I think at least airlines may probably take lesser time to pick up, but hotels will probably take a longer time to go to the pre-COVID levels. It's not like their occupancy levels will not go up. I'm sure that Indians, much as the case, and I again go back to the European experience, China experience, I think people being social animals, we love to travel, we love to go out, and that will not change. In fact, for the last 3 4 days, we as a friend circle were planning that we should go somewhere, and we're trying to find places. So that is there. Of course, the fear is there at the back of the mind, but it will come up. And I think eventually things will normalize even in the hotel sector. But it's not going to be pre-COVID, at least for the next 1 year, is what my belief is.
We do understand, because we have also been going through that COVID behavior fatigue now, and every now and then we talk with friends of going out for weekend and long weekend, and thankfully in Bangalore there are a lot of options. But we have been planning for last 1 month and still not executing. And in good old days, we would just plan and go without giving second thought. So now we realize the importance of those freedoms, so to say, in terms of time
Yeah, and I think
utilization.
one thing which is happening from the way I see it is instead of going to hotels or shared resorts, it's more towards individual bungalows where you rent the entire bungalow for yourself and five, six families. So at least you don't have to interact with outsiders. So I think that behavior change is also there right now. Whether it will last for long, I'm not sure. But at least in and around Bombay where I am, there are enough such places which are there and they are in good demand. But for resorts and for hotels, it's probably a longer rope that will need to be given.
So, Chintan, my last question is about capital market participation. And you being in capital market, we being in the market, we always want newer ideas to be coming to the market. And if you see the recent trend, one which you also mentioned about using technology, be it for shopping, be it for education, be it for entertainment. So now these days, the term for shopping is big basketing. The term for entertainment is Netflixing. So with all these changes happening and these companies increasing their user base significantly, do you think we'll follow the US model and we'll have a lot more companies in that space getting listed? Because I think that trend changing and newer companies which are technology enabler in terms of finding out different solutions coming to the capital market and listing themselves so that retail participants can participate in those stories.
Yeah, I think eventually that may happen, but for that, the one part is that their business models have to stabilize to scale up in a meaningful manner. And of course, their cash burns have to come down very sharply because it's almost impossible for retail investors to go and invest in a company which is burning huge amounts of cash. That's probably where private equity players have the understanding and strength to back a business and take it to a particular level. And then when it starts probably generating some amount of money, or at least the business model is stable from growth perspective, it can come and list. As things stand right now, you also alluded to one of the companies, the multiples and valuations to tech companies in US is given far higher. In India also, they are trading at reasonably high multiples, no doubt they do get. But I think the understanding and the demand is much higher outside. So it will be interesting to see whether many of these companies list in India or they want to list directly in the US markets where, as you are aware, today, as we speak, technology as a percentage of market cap in US, technology sector as a percentage of market cap in US listed companies is almost 31 or 32%, which is very similar to the 1999 .com bubble levels of 33%. So yes, today technology, without technology, the world is different, and hence maybe that 31, 32 can go higher. But I would say that there is more demand outside. Probably Indian investors are much more conservative, and hence it will be interesting to see many of these, whether they list in India or outside.
And now with government looking at an option of listing only outside India, which is in the news recently, maybe that can help these companies raise money, if not in India, then outside India.
That's right. That's right.
So Chintan, that brings us to the end of our conversation, and it was quite enlightening on various fronts. So for me, the learnings from this conversation has been that it reduced our concerns about small businesses because most players are more of enablers, but at the end of the day, a shopkeeper in maybe Udaipur or Jalandhar or Ludhiana is getting benefit out of this entire story, which could not have been the case had it not been for technology. Second interesting observation was that expansion of audience because of technology is happening at a very, very rapid pace. And I think that will benefit all the stakeholders. And the end, very important lesson for us is that, we should believe in cycles, and cycles do come and go. And like you gave an example of FMCG in 2003 to 2008 and utilities now. So as investors, and maybe a lot of our investors will take that as learning, that we should not be just chasing momentum, and we should have a core investment philosophy where we allocate depending on the risk appetite and the asset allocation which we believe in. And to end this conversation, the biggest punch which I am taking from this is that the example which you gave from sanitizer, that if entire India starts consuming something, then the demand for that product or category can increase manifold in a very short span of time. And we really hope that that happens for not only sanitizers but a lot of other sectors. And I think that would be the true potential of India in terms of realizing where we can reach in terms of our GDP growth and our overall well-being. Thank you so much, Chintan, for taking out time on a busy day and on a day when market is open. And I'm very, very sure our investors would learn a lot from this, and it would help them in terms of their portfolio constructs. Thank you so much.
Thanks a lot, Harsh. Thanks, Megha. And thank you to all your viewers. Stay safe, take care, and I hope to connect with all of you sometime later as well. Thank you.